is a little bit different. Now we're talking about how we divvy up the expenses based on one property that's simultaneously being used for multiple purposes. So best example is maybe a duplex where the owner lives in one half of it but rents out the other half of it. Okay, that is a multi-use property. So just like with allocating based on time, we still have to allocate those expenses because you don't get to deduct like utilities and repairs and personal expenses like that on a personal property, on a personal use property, but you do get to deduct those things on a rental property. So you have to apportion those expenses based on square footage of the two spaces. We're talking about the same property that is being used at the same time for two different uses. So for example, we got Guadalupe owns and lives in a fourplex of identical two-bedroom units. During the year, the entire fourplex had $100,000 in expenses. She's going to allocate 3/4 of those expenses and deduct $75,000 in rental expenses against the rental income that she received from those other 3 units. The remaining $25,000 is considered personal and is deducted to the extent that she can if she itemizes. So again, the interest and the property taxes would be deductible. Her personal portion would be deductible on the Schedule A as an itemized deduction, right? But the other expenses, the utilities, the repairs, that sort of thing would not be deductible for her personal portion. There are certain expenses, again, that could be deductible 100% though. Management fees, anything directly related to the rental. Management fees, repairs done on the rental units directly. So if you had to hire a plumber to come in and unclog the toilet in one of the units, that is a direct expense. You'd get to deduct 100% of that. Let's see. All right, so this is just an example of how that personal/rental would be handled. And this is under the IRS method. So they've got, so this, it ends up being 0 because we can't deduct any more. We cannot get a loss out of this. This is using the tax court method. Again, we're going to end up at 0 because we can't go below 0 there. For the multi-use property, keep in mind that you still have to, you can still depreciate that portion that is associated with the rental part of it. So if it's a residential property, which it probably would be a residential property if you're using it personally, you can depreciate in that example, you can depreciate the 3/4 that is being used as a rental, but you can't depreciate the 1/4 that is being used personally. Also, that the whole concept of taking out the land part of that still applies as well. So you'd have to take that out. We can't depreciate the land. We can only depreciate the building. All right.